Every year, countless small business owners leave money on the table. They pay more in taxes than they legally owe. Why does this happen? Well, it is often because the tax code is complex, and honestly, new opportunities are easily missed. This year, 2025, is no different. A powerful new tax credit has been introduced, designed specifically to help small businesses grow and modernize. Yet many entrepreneurs will overlook it completely. They will get busy with day-to-day operations. They will assume it does not apply to them. This is not just another minor deduction or a complicated loophole for giant corporations. It is a significant dollar-for-dollar credit aimed squarely at the heart of American enterprise, your small business. The government wants to reward you for investing in the future. They understand that when small businesses thrive, the entire economy benefits. So, what is this powerful new tool? It is officially called the Future Forward Business Investment Credit. This is a brand new tax credit for the 2025 tax year. It was created to encourage small businesses to invest in two key areas: employee development and technology upgrades. This is not a deduction, which only reduces your taxable income. This is a credit, which reduces your final tax bill, dollar for dollar. A $5,000 credit, for example, saves you $5,000 in taxes. The credit is designed to be accessible. It is not reserved for high-tech startups or large companies with big budgets. It is for Main Street businesses too. The Future Forward credit is calculated as 20% of the first $50,000 of qualifying expenses. This means the maximum credit you can claim in a single year is $10,000. For example, if your business spent $30,000 on new computer systems and employee software training, you could claim a credit of $6,000, 20% of $30,000. Now for the most important question, does your business qualify for the Future Forward Business Investment Credit? The eligibility rules were designed to be broad, capturing a wide range of small and medium-sized enterprises across the United States. The first major requirement is that your business must have fewer than 100 full-time equivalent employees. This clearly targets the credit towards smaller operations, not large corporations. The second key rule relates to your annual revenue. Your business must have average annual gross receipts of $25 million or less for the 3 preceding tax years. If your business is new and has not been in operation for 3 years, the IRS has rules for calculating the average based on the period you have been in existence. Finally, you must maintain proper documentation for all the expenses you claim. This is perhaps the most critical part of qualifying. You will need to keep detailed records such as invoices, receipts, and proof of payment for all training programs and technology purchases. Start a dedicated folder, either physical or digital, for all your 2025 Future Forward credit expenses. This simple habit will make tax time much smoother and more profitable. Let's move from theory to practice. How does the Future Forward credit work in the real world? Consider a small construction company with 15 employees. The owner, Maria, wants to improve safety and efficiency. In 2025, she spends $20,000 to send her crew to an advanced safety certification program. She also spends $15,000 on new project management software that allows her team to track progress and materials from their tablets on the job site. Now, think about a local restaurant owned by 2 partners, David and Sarah. They have 40 part-time and full-time employees. They want to modernize their guest experience and streamline kitchen operations. They invest $10,000 in a new online ordering system and a reservation platform. They also spend $5,000 on a professional development course for their front-of-house manager, focusing on customer service and team leadership. What about a freelance graphic designer, operating as a sole proprietorship? Let's call her Chloe. She is a one-person business, so she easily meets the employee criteria. In 2025, she decides to upgrade her technology to handle more complex projects. She buys a new high-performance computer for $4,000 and subscribes to a full suite of professional design software for $1,200 per year. Claiming the Future Forward Business Investment Credit is honestly a straightforward process if you follow the steps carefully. Don't wait until the last minute to get organized. Seriously, the process begins long before you actually sit down to file your taxes. The first step, which you should really be doing throughout 2025, is to identify and track your qualifying expenses. You'll want to create a specific account in your bookkeeping software, or even just a simple spreadsheet, to log every eligible purchase. Step 2 is to gather all your supporting documentation. For every expense you logged, you'll need proof. That means collecting and saving all related invoices, receipts, bank statements, and credit card statements. For software subscriptions, keep a copy of the service agreement. For training courses, hang on to the registration confirmation, the course outline, and certificates of completion. You can scan them and keep digital copies in a dedicated cloud folder for easy access and safekeeping. Step 3 happens when you prepare your 2025 tax return in early 2026. You'll need to complete the new IRS Form 8999, which is the designated form for the Future Forward Business Investment Credit. On this form, you'll list your total qualifying employee development expenses and your total qualifying technology upgrade expenses. The form will then guide you through calculating the credit amount, 20% of the total, up to a maximum of $10,000. So, the Internal Revenue Service has actually released some initial guidance on the Future Forward Business Investment Credit in its publication 583, Starting a Business and Keeping Records. While, a few details are still being finalized, the main principles are pretty clear. The IRS is emphasizing that this credit is really meant to spur new investment. That means generally you cannot claim expenses that you were already contractually obligated to make before the law was enacted. The investment must be a decision you make during the 2025 calendar year. The IRS is also very specific about documentation. Taxpayers must maintain contemporaneous records. In other words, you should record your expenses as they happen, not try to piece things together from memory months later. Your records need to show the amount, date, place, and the essential character of each expense. For technology, that might mean noting the make and model of a computer. For training, you should include the name of the institution and the course title. The official IRS guidance also makes it clear how to distinguish between repairs and upgrades, especially when it comes to technology. Routine maintenance and minor repairs to existing equipment do not qualify for the credit. The expense really has to be for a new purchase or a significant upgrade that adds material value or new capability to your business. And finally, the IRS is very clear that you cannot claim this credit for expenses that are funded by other tax-exempt government programs. You really have to use your own business funds to pay for the expenses you want to claim. Even with the best intentions, business owners sometimes make simple mistakes that can put their ability to claim the Future Forward credit at risk. One of the most common errors is just poor record keeping. A lot of owners will buy a new piece of software or send an employee to a workshop and then, just toss the receipt. They might assume a credit card statement is enough, but the IRS actually requires more detail than that. A credit card statement might just say, Office Supply Store, $1,500. That doesn't prove you bought a qualifying computer system. You need the itemized receipt or invoice. Another frequent mistake is misinterpreting what actually counts as a qualifying expense. Some business owners might try to claim costs that fall outside the rules. For example, they might include the cost of general business books or subscriptions to industry magazines under employee development. While those are valid business expenses, they don't usually qualify for this specific credit, which is really focused on structured training and certification programs. Similarly, trying to claim a new smartphone that is used for both personal and business reasons might be disallowed. Timing is another place where mistakes can happen. The Future Forward credit only applies to expenses that are both incurred and paid during the 2025 calendar year. Both the purchase date on the invoice and the payment date have to fall within the 2025 tax year. And finally, a big error is just forgetting to file the correct form. You cannot just subtract the credit amount from your taxes owed without the proper paperwork. You have to complete and attach IRS Form 8999 to your return. So, today is August 13th, 2025. That means you've got just a bit over 4 months left to make qualifying investments for the Future Forward credit. The window of opportunity is closing faster than you might think. Business investments, especially the big ones, are not made overnight. It takes time to research the right software, get quotes for new equipment, or find the best training programs for your staff. If you wait until December to start thinking about this, you might just run out of time to make a purchase and get it properly documented. The time to act is now, while you still have the chance to plan and execute your investments wisely. Think of the remaining months of 2025 as your strategic runway. Use this time to really assess your business's needs. Where are your biggest pain points? Remember, suppliers and training providers get super busy toward the end of the year. Tons of other businesses will be spending their budgets before December 31st, which can mean shipping delays, stock shortages, and limited availability for training courses. Alright, let's go through some of the most common questions people have about the Future Forward credit. First, can you claim the credit if your business is not profitable this year? Well, this is a non-refundable credit. That means it can reduce your tax liability to zero, but you can't get a refund for any amount that goes over your tax bill. The Future Forward Business Investment Credit is a rare chance to get a direct financial reward for strengthening your business, but it's only available for expenses incurred in 2025. Once the clock strikes midnight on December 31st, your chance to qualify for this year is gone. So take a moment this week to sit down, review your business goals, and see how this credit can help you achieve them. Your future self will definitely thank you.